In today's video, I'm going to talk about the 5 pros and 5 cons of paying your student loans off early. Let's start with the good stuff first. One of the most obvious pros to paying your student loans off early is that you don't have a student loan payment. For me, I don't exactly remember making my last student loan payment, but I do remember the feeling I had 30 days later when I felt like I needed to make another payment and realized that I was done. I think that's when it actually hit me, was not in the act of making my last student loan payment, but 30 days later when I mechanically went to go make a payment because I felt like there was something wrong with my checking account. I had too much cash in my checking account. Number 2 is that you'll pay less in student loan interest. So your schedule for paying off your loans means that from now until you're done, you're paying back what you owe plus interest. And if you can pay it off more quickly, then you'll pay back what you owe plus less interest. So that's the number 2 benefit, I'd say. The third benefit is that when you're done, your debt to income ratio is much less than it was before. And if you were trying to purchase a home after you're done with your student loans, then your debt to income ratio that the mortgage officer is looking at doesn't include your student loans anymore. Number 4 is that you're putting your money towards your future and not your past. And that's gonna feel different. You know, it feels great to watch your loans approach zero, but it's gonna feel better to watch your balance of your accounts grow. And lastly, you get to ditch your loan servicer. Now let me put that into perspective with a loan balance. So if you had $100,000 at 6% interest and it was a federal loan with the federal loan servicer and you decided to pay it off in the standard 10-year plan, you would pay $1,100 per month, and in the end you would end up paying your $100,000 back that you owed plus $33,000 in interest, what you owe plus interest. Now if you decided to double down and pay $2,200 per month, recognizing that that's $1,100 that you no longer have on top of what you were paying, and you did that, you would benefit to the tune of finishing in 4 years instead of 10 years, so time, and you would pay just $13,500 in interest as opposed to $33,000. So big benefits in the case of our example. So some downsides to paying your student loans off early. First would be that maybe there's not a whole lot of savings along the way because you're doubling down on your loan payments. The second would be that if you hadn't considered or done the math for income-driven repayment to consider loan forgiveness, paying your student loans down to zero means that you're throwing forgiveness out the window. That's not a bad thing. It just might be something to take into account before going down that path. Third potential downside is that you have less money for other types of debt. So if there is other types of debt, like consumer debt, which generally has a higher interest rate, or mortgage debt, and you have your student loan payments there, it just prioritizing which debt you are paying down can get a little tough to do if all of your money is going towards the student loans. Another downside, and I wouldn't necessarily characterize this as a true downside, but if you don't have student loan interest to pay, then there's no student loan interest tax deduction to take on your tax return. So for single filers, if you make more than $85,000, then there's no student loan interest tax deduction. And for married filers who file jointly, if your modified adjusted gross income is above $140,000, then there's no interest tax deduction to take. And if you decide to pay your loans off early in the federal system, and you're not a borrower from the late 90s to early 2000s when they had super low interest rates, then leaving your loans in the federal system and paying them off early might not be as beneficial to you as refinancing. So if you leave them in there and you pay them off early, I guess the downside is that you didn't consider moving the loans to a private lender to get a lower interest rate and pay back what you owe plus less interest. I've had the pleasure of helping hundreds of borrowers make informed decisions on their student loans situation. If you're watching this video and you feel that you haven't done the math to decide whether or not it makes sense to pay your student loans off early or go for loan forgiveness, check us out on studentloanplanner.com or check out the next video, 7 pitfalls to avoid while on a debt-free journey.